Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2025 question number 12. Let's go to the question. This is the incomplete accounts related question. What is the requirement? They request us, look here. They request us, listen. Purchases for the year ending 31st March 2025. There are total purchasing and trade debtor balance as at 31st March 2025. This is the closing. What are the requirements? Purchasing for the year ending 31st March 2025. Total purchasing and trade debtor balance, the debtor control balance as at 31st March 2025. This is the closing debtor balance. Okay, let's see the question. I like to prepare, there is a trade account and there is a debtor control account we must prepare. To identify these answers, look here. Firstly, Nethuli Enterprises has not maintained accounting records properly. Okay, inventories and trade debtors balance of the business as at 31st March 2025 and 31st March 2024 are given below. Look here, inventories and trade debtors as at 31st March 2025, as at 31st March 2024. 2024 is old, therefore this is opening balance. Opening. What is the closing? Closing is 2025. This is the closing. No, look here. Therefore, inventories are identified in the both opening and closing. Where? Cost of sales. Therefore, 50 and 30. I prepared trade account. This is the income statement top of. Okay. This is the income statement. This is the income statement in 1000. What is the major structure? Sales minus cost of sales. What is the structure of the cost of sales calculation? Opening inventory, opening stocks add purchasing and minus closing stocks. In that case, we can calculate the cost of sale. After that, we can calculate gross profit. Enough. Okay. I can enter inventories. Look here. Inventories. What is the opening? Opening inventory is 30. Opening inventory is 30. Opening stocks. Okay. 30. Opening stocks 30. Opening stocks 30. And what is the closing stock? Look here, inventories closing balance 50. 50 should be deduct from cost of sales. Look here, 50. Closing stock should be deduct 50. Look here, our requirement. What is the requirement? Requirement is purchases. Look here, purchasing is there. Look here, purchasing is there. Okay, let's see the question. And they said us trade debtors opening 190, closing is blank. This requirement is closing balance. We must calculate closing balance using debtor control account. I prepared debtor control account. Another page. Debtor control account. This is the debtor control account. debtor control account. This is the opening balance is there, opening balance, and closing balance is there, closing balance. This is the balancing. And what is the supply of there? This question, what is this? Opening balance 190, opening balance is debit 190 is opening balance. And second one, look here, second one, all purchases and sales on the business are made on credit basis. This meaning is all sales are credit sales, all purchases are credit purchasing. Okay, all purchases and sales of the business are made on credit basis. Look here, the business maintains a gross profit margin. Look here, business maintain a gross profit margin 25% on the selling price, 25% on selling price. Okay, total cash received from trade debtors and cost of sales for the year ending 31st March 2025 were 470 and 300 respectively. What is the first one? Total cash received from debtors 470. What's the double entry? Total cash received from trade debtors. Cash debit, cash control debit, trade debtors credit. Cash debit, trade debtors credit 470. This is impact to cash control debit, trade debtor credit, debtor control credit 470. Look here, what is the value? 470. No, 470. Okay, 470 is cash received, cash received amount. Okay, cash received, cash control debit, trade debtor control credit. Okay, the second one is what is that? Second one is 300. What is that? Cost of sales of the year ending 31st March 2025, 300 cost of sales are there. Cost of sales means calculation of these elements. Cost of sales is 300 is this value is cost of sale. Okay, cost of sale should be calculated these elements, mixing these elements, opening inventory, purchasing add, and minus closing stock. Cost of sales are calculated this formula. Okay, what's the other information? Look here, other informations. Okay, all informations are done, we can calculate. Look here, purchasing is there. Okay, we must calculate purchasing. How can we calculate? Look here, 300, this is the reverse of this. 300 must be, use the calculator, 300, you must go to the reverse side now. Therefore you must, all deduction you must add, 50 is should be add, and is the reverse, this is the addition of 30. At the reversing point you must be deduct 30. Okay, 300, there is 300, you are in this point, this is the reverse shot. At this time reverse shot 300, please get the 300 and use the calculator, and you must enter the opposite side. Why? This is the reverse side. No, therefore 50 should be add, 30 should be minus. The answer is, what is the answer? 320. purchasing is 320. Okay, 320 is answer is purchasing. Purchasing 320 is, there are two answers. Purchases. What is the trade debtor balance? Trade debtor balance. Trade debtor balance is the debtor control balance. There is a deficit of there is a deficit in account. There is a closing balance. They request us closing balance carried down. But there is a deficit. What is the deficit? You know what is the credit sales. Credit sales. You don't know credit sales. What is the double entry of credit sales? Sales credit, debtor control debit. You should be identifying sales credit. So credit sales. Sales is there. Look here, sales is there. Sales is there. You should be identify the sales. Sales. This is related to cost of sales and what is this? Gross profit. You don't know gross profit. You should be identify sales value to fulfill this debtor control account. Therefore, I should be calculate sales value. I use the margin, gross profit margin. Look here. They said that business maintain gross profit margin. Gross profit margin 25% on selling price. On selling price. Look here. 25% on selling price. 25% on selling price. The gross profit is there. Gross profit. On selling price, this is the 100 is selling price. 100 is selling price. Okay, at this point, what is the selling price? Selling price is this one. I write the percentage, meaning percentage is there. 100 is selling price. 25 is gross profit. 25 is gross profit. What is the cost of sale? Cost of sale, sales value is 100. After the cost of sale deduction, the answer is gross profit 25. What is the gross profit? Is 75. 75 deduction. Okay, and this case, what is that? The 75 is same to 300 actual value. Therefore, I prepared 100 value. What is that? How can we say identify? 300 is there. Okay, what is the calculation? 300 divided in 75. This is the small value of, this is the neighbors. Okay, 300 is same to 75. Therefore, 75 I divide and multiply. What is the requirement? Multiply is 100. Therefore, I can calculate 400. Okay, the net gross profit is 100. You should be identify the meaning of the gross profit margin. Gross profit is 25. This you know. Based is selling price. On selling price. Okay, on selling price means 100 is selling price. If the 100 is selling price, 25 is gross profit. The gap is cost of sale. Cost of sale 75 is 300. Therefore, 300 divided by 75. This is the same. This is the cost of sale. This is the cost of sale. Okay, and you multiply that requirement. Requirement is 100 by selling price. The sales is 400. Sales credit, debtor control debit 400. You can balance it. 590. You can deduct 120 is closing balance. Okay, 120 is closing balance. 120 is closing balance. This answer is 3. For question number 12, answer is 3. Okay, in next video, this is a partnership question is next in 13. In next video, we must meet question number 13.